Your credit score could be 20 to 50 points
higher
right now without applying for anything, without a hard pull, without spending a dime. And the tool that makes it possible has been sitting in your family's wallet this whole time. But here's what nobody tells you. Not every bank reports authorized user accounts the same way. Some banks don't even report them at all. And if you pick the wrong one, you just wasted 6 months waiting for a boost that's never coming. I'm about to show you which issuers report, which bureaus handle them differently, and the 5 scenarios where this strategy actually moves the needle in 2026. If you're new here, I'm Flo. I teach credit and business funding. Stick around. I have a free checklist for you to verify any AU spot you may be considering. So let's get straight in under 60 seconds because I know you've heard the basics. When someone adds you to their credit card, that entire account history, payment record, credit limit, account age shows up on your credit report. You inherit their good behavior. But here's the piece most people miss. It's not just about the score bump. When you use a card as an authorized user, the bank sees transactional data on you. You're no longer a question mark in their system. You're a customer with behavioral data. That matters way more than most people realize, especially if you're trying to get approved for products at that specific bank. The way I look at it, AU accounts are less about the score number and more about positioning. They get you inside the door of a bank's ecosystem. Now, here's where things get real. Not all credit card issuers report authorized user accounts to their bureaus. Some do, some don't. Some report them conditionally only if you meet certain age requirements. Let me walk you through the major issuers. Bank of America, no minimum age for the AU, up to 9 authorized users allowed. Reports full history, reports to all 3 bureaus. This is one of the most straightforward options. Next, Capital One, no middle age, reports full history, consistent reporting across all 3 bureaus. Another solid pick, in my opinion. Discover, minimum age 15, up to 5 authorized users, reports full history to all 3 bureaus. Next up, Chase, no minimum age, no limit on AUs, but here's the thing, their reporting varies. Some Chase cards report consistently, others don't. You need to verify before you assume. American Express. This is the tricky one. Minimum age 13 or 15 depending on the card. Up to 99 AUs allowed. But they don't report to all bureaus consistently, and they may not report the full history. An Amex AU might help, but it won't be comprehensive. Credit unions like Navy Federal and Penn Fed, their policies vary by account type. Some don't report AU accounts at all. You've got to ask directly. The takeaway, if you can get added to a Bank of America, Capital One, or Discover card, you've got the highest probability of it showing up correctly and on all 3 reports. Even if the issuer reports your AU account, the 3 bureaus handle them differently. This matters if you're building credit across all 3. Experian includes AU accounts and reports both positive and negative information. But here's the protective piece. If the primary account becomes derogatory, late payments, or charge-offs, Experian removes the account from your report. You inherit the good, but you bail out if things go sideways. Equifax includes AU accounts, but only if you are at least 16 years old. They report both positive and negative without restrictions. TransUnion includes them with no age restrictions, reports both positive and negative. So if you're under 16, Equifax won't include it. If the account goes bad, Experian protects you. These aren't things most people know, but they affect your strategy. Let me be direct with you. AU accounts work best in specific situations. They're not a universal fix. Here's when they actually help. Scenario 1. You're getting rejected at a specific bank. Maybe Chase keeps turning you down. Becoming a Chase Authorized user puts you in their database. Next time you apply, you're not a blank slate. You are a customer with history in their ecosystem. Scenario 2. You need a history boost before a major purchase. If you're 6 months from a mortgage application and your credit history is thin, an AU account can add years of perfect history to your report overnight. 15 years of payment history just appeared on your credit report. No application required. Scenario 3. You're diversifying credit mix and account age. If all your accounts are recent, adding an older AU account fills a gap that FICO scores weight heavily. Scenario 4. You're rebuilding after credit damage. AU accounts bridge the gap while your own new account season. They buy you time. Lastly, scenario 5. You need to crack into relationship banking. Using a card in a bank's ecosystem gives them behavior data on you. From their perspective, you go from unknown to known. That's how you go from rejected to pre-approved. Quick but important note here. You might have heard that AU accounts don't work anymore. That's partly true, but only for VantageScore. VantageScore 3.0 deliberately minimizes the impact of authorized user accounts. But if FICO still counts them fully, and FICO dominates mortgage lenders, auto lenders, most credit card issuers use FICO. Also, and this is timely for 2026, FICO's newer models have fraud detection algorithms specifically designed to identify paid trade lines from strangers. Family and friend AU accounts still work. Paid services where a stranger adds you, those are getting flagged and discounted. Don't waste your money there. I'm going to be honest with you. An AU account is not a magic fix. It is a tool. And like any tool, it only works when you use it correctly. Before you say yes to an AU spot that you are considering, verify what I'm about to show you. Because a bad AU account is worse than no AU account at all. Before you say yes to any AU spot, verify these things. Utilization on the account is 1% or lower, ideally 0. 0 late payments. 0 derogatory marks. Account age of at least 3 years. Longer is better. Credit limit of at least $5,000. The issuer confirms they report AU accounts, and the primary card holder plans to keep that account open long term. If any of those are missing, keep looking. A bad AU account is worse than no AU account. Before we wrap up, let me save you from the biggest mistakes I see people make with AU accounts. Mistake 1. Accepting an AU spot on a card with high utilization. Someone offers to add you, you're excited, you say yes without checking their balance. They're carrying 40% utilization. Now your report shows 40% utilization on that card. That kills your score faster than it helps it. Mistake 2. Not confirming the issuer actually reports. You get added to someone's card and assume it's working. 6 months later, you pull your report and the account is in there. That's 6 months wasted. Always verify reporting policy before you accept. Mistake 3. treating AU accounts as a replacement for your own credit. AU accounts can disappear when the primary cardholder closes the card or removes you. You still need accounts in your own name. Use AU to accelerate, not to avoid building. Here's the bottom line. Authorized user accounts still work in 2026 if you're strategic about it. The right issuer, the right account, the right scenario. That's the difference between a 50-point boost and 6 months of nothing. I put together a free AU account pre-acceptance checklist. It's everything you need to verify before you say yes to any AU spot. Links in the description. Grab it while it's there. Keep that momentum going. I'll see you in the next one.